So in 2011 and 10, where would silver have really gone if there was no internet? If there was no way to buy ETFs, no one had a trading account online, and there were no online bullion dealers. Where would silver have gone in 2011 without such easy access? Now, this question I have is kind of like a philosophical kind of question. It's not just about silver, it's about any kind of uh, trading slash speculative instrument. Now, I'm not saying that if you own silver, you're like, you're like some big time high trader speculator. What I'm saying is that it's very easy to to buy silver or to trade right now. And for the people who are pros, serious at it, it's great because, I mean, it takes less legwork. There are more resources and tools as far as, like ThinkorSwim, right? If someone who's been trading for many years, who put their lumps in early and now is doing better, for them, ThinkorSwim is the greatest thing ever because it saves them time. It's easier. However, from what I have read many places, is that about 80% of speculators lose money. And it doesn't matter what market it is. It doesn't matter what time period it is. It just, in general, human behavior, the way humans are, is like about 80% of people will lose money speculating. Now, some people will say it's higher, some people will say it's lower, but we'll just say a general thing. We'll just say most people will lose money, right? Most retail investors who go use ThinkorSwim will lose money. Most people who want to buy bullion from like APMEX are underwater. Now, if someone's like, so I'm not saying that these, APMEX or ThinkorSwim is providing a bad service. What I'm saying is that when you know the statistics about how the retail investor does when they try and get into things like silver or like a trading account, mathematically speaking, we know the result. Most of them will lose money. So for the general public, is it really a good thing that it's so easy to trade? I mean, or it's so easy to buy and sell bullion? That's kind of like a philosophical question that I'm asking, and I'm not saying that it's wrong or people shouldn't be allowed to, but just think. I mean, without the ETFs and without online bullion dealerships, where would silver have really gone in 2011? I don't think it would have hit $49 or around $4 an ounce if people had to get silver by going out in their car and driving somewhere and getting it. I know when I was looking for sterling silver, I mean, there were basically the same group of people I saw over and over again, like at estate sales and auctions and so forth. I mean, there's like a much smaller group. When it came to going to coin shops and so forth, in 2011, when you read the message boards, there was a huge, buzz, right? But when you went to a coin shop, the buzz wasn't as strong. So I'm really wondering, where would silver have gone in 2011 if there were no ETFs, if there was no easy way to get a trading account, if people had to go out in their car to buy silver? That's kind of a question I'm asking because I think about things like this. These are the kinds of things I think about. And so my final point is that even though something like ThinkorSwim is doing a great service for the pros and the people who know what they're doing, for the general population, perhaps it might not be a great thing for them. That's kind of what I want to allude to. Is just because the easier it is to do something, right? The less hurdles they're in the way, the less research it takes, and the less serious someone has to be. Because someone who really wants to trade, they're going to trade right regardless of ThinkorSwim exists. They're gonna get over those hurdles, and someone who's doing that is much more serious about it. So that's kind of the thought I wanted to throw out there. Is for the general public, maybe these things might not be such a good thing, even though it might be great for the pros. Thank you and be well.